Welcome to World Alert Updates. Subscribe and press the bell icon for more updates. The world was stunned. No one saw it coming. In a single seismic moment, the global fast food landscape was turned upside down. China and India, two of the world's most populous nations, slapped a staggering 300% tariff on American fast food overnight, sending shockwaves through the industry. Headlines blared from New York to Shanghai, and McDonald's stock nosedived in real time. Investors watched in disbelief as billions were wiped from the company's value. This wasn't just about money. It was a political earthquake, shaking the very foundation of global trade and diplomacy. Beijing and New Delhi, in synchronized press conferences, declared the move was to protect local culture and public health, citing rising obesity and the need to preserve traditional cuisine. But beneath the official statements, the real message was power. A direct challenge to American influence and a signal that the global balance was shifting. The Golden Arches, once a symbol of modernity and aspiration, were now painted as a threat to national identity and sovereignty. For decades, a Big Mac abroad meant global connection, a taste of America anywhere in the world. Now, that narrative was shattered, replaced by suspicion and resistance. The tariffs were a loud, unmistakable rejection of American cultural dominance, sparking debates about globalization and national pride. In cities across China and India, crowds lined up, not for a treat but for one last affordable Big Mac before prices soared beyond reach. News crews captured emotional farewells to a childhood staple. For many, it felt like the end of an era, a goodbye to a piece of their youth. McDonald's was no longer just a restaurant. It had become the front line of a new Cold War, a symbol of the growing divide between East and West. The expansion of McDonald's had always signaled progress and prosperity, but now it was a casualty of shifting power and rising nationalism. The world watched, breath held, as the fast food giant became a pawn in a global standoff, its fate uncertain and its future hanging in the balance. The immediate impact: chaos, confusion, and a sense that the rules of the global order had changed overnight, leaving millions scrambling to adapt. The tariffs weren't just economic, they were a cultural line in the sand, a declaration that local traditions would not be steamrolled by foreign brands. The two most populous nations had declared the era of unchallenged American influence was over, and a new chapter in global power had begun. For many, McDonald's was a place of memories and milestones. Now, it was a luxury, a reminder of how quickly the world can change. The fast food giant was caught in a geopolitical crossfire, its golden arches now a symbol of a much larger struggle. The world's appetite for American culture had changed, replaced by a hunger for something more local, more authentic, more their own. The Golden Arches were under siege, caught between nostalgia and nationalism, and at the heart of a new global reality. Even before the tariffs, McDonald's was struggling to maintain its foothold in the competitive Asian market. Sales growth had slowed significantly as younger generations increasingly turned to healthier, local foods that offered more variety and freshness. The initial novelty of American fast food had faded over time. McDonald's became just another dining option among many. Local chains thrived, offering unique flavors and dishes that resonated more deeply with local tastes and cultural preferences. In China, spicy hot pots and noodles boomed in popularity. In India, traditional dishes like dosas and biryanis stole the spotlight from Western fast food. McDonald's attempted to adapt by introducing local menu items, but these efforts often missed the mark, failing to capture the essence of local cuisine. Food safety scandals in China and ongoing health debates in India further damaged its reputation, making recovery even more challenging. Negative headlines continued to chip away at consumer trust, making it increasingly difficult to win back skeptical customers. When the tariffs hit, McDonald's was already in a vulnerable position, struggling to maintain its relevance. With billions invested, thousands of restaurants, and hundreds of thousands of jobs on the line, the stakes were incredibly high. These markets were supposed to be the future of McDonald's growth, but now that future was shrouded in doubt and uncertainty. The tariffs weren't just a new problem. They were a massive blow to a stumbling giant already facing numerous challenges. McDonald's faced a crisis of relevance and survival in Asia, struggling to adapt to rapidly changing consumer preferences. The company's global ambitions had hit a significant wall, forcing a reevaluation of its strategies. The fast food icon was on the defensive, fighting for its place in a world that was rapidly changing and evolving. Beijing and New Delhi cited health and local industry as reasons for the tariffs, But the tariffs were about something deeper, something more profound. This was a bold act of cultural self-assertion, a declaration of independence from American influence that had long been pervasive. The tariffs were a wall, a protective barrier safeguarding not just businesses, but the very essence of national identity. For years, American brands dominated the global landscape. McDonald's was the ultimate symbol of this dominance. To many, the Big Mac was a Trojan horse for American values, infiltrating local cultures. By targeting McDonald's, China and India declared, "We'll define our own modernity on our own terms." This was about power politics. Two global giants flexing their muscles, asserting their sovereignty. The 300% tariff wasn't a negotiation, it was a prohibition, a firm stance against foreign influence. The message was clear. American fast food is no longer welcome here. This was protectionism for the soul, not just the economy, a revival of cultural pride. National pride and cultural integrity now trumped cheap burgers and fries as local flavors took center stage. The move challenged the world order and tested American leadership, shaking the foundations of global trade. China and India were no longer content to play by old rules. They were setting new ones. The era of passive consumption was over. The age of cultural confidence had arrived, heralding a new dawn. The Golden Arches had become a battleground for national identity, a symbol of resistance and renewal. Washington erupted in outrage. Donald Trump, ever the firebrand, blasted China and India on social media. "They are attacking our great American companies. This will not stand." The pressure on the White House was immense. Officials condemned the tariffs and promised swift retaliation. Plans for new tariffs on Chinese and Indian goods, electronics, textiles, cars were announced. The goal: inflict economic pain and force a retreat. The rhetoric was tough. "We will not allow our iconic brands to be targeted." But behind the scenes, fear grew. A trade war with two global giants could trigger a recession. The stock market tumbled. Businesses pleaded for diplomacy. The administration walked a tightrope: defend American interests but avoid catastrophe. Trump's aggressive tone raised the stakes, making compromise harder. For China and India, backing down was not an option. The dispute became a matter of national honor for all sides. Diplomacy was sidelined by political posturing. The world edged closer to a dangerous economic conflict. The trade war had become a test of wills, with global consequences. The tariffs sent shockwaves through Wall Street. McDonald's stock plunged, but the pain spread far beyond fast food. Suppliers, farmers, packagers, logistics firms saw their stocks tumble. Fear gripped the market. If McDonald's could be targeted, who was next? For American families, the trade war meant higher prices on everyday goods: phones, clothes, cars. Economists warned of a slowdown in consumer spending, threatening the U.S. economy. The conflict, sparked by burgers, could cost families thousands a year. The risks to the global financial system were enormous. China, a major holder of U.S. debt, could retaliate by selling off treasury bonds, causing chaos in credit markets. Interest rates would spike, borrowing would become more expensive, and a financial crisis could loom. The global economy, built on complex supply chains, faced massive disruption. Companies would scramble to find new suppliers and move factories, driving up costs. The world would become more fragmented, less efficient, and poorer. Decades of economic integration were at risk. The trade war threatened to unravel the fabric of global commerce. The fallout was just beginning. As McDonald's faltered, local fast food brands seized the moment. Years in the shadow of the American giant had prepared them for this opportunity. With McDonald's prices soaring, local chains launched patriotic campaigns: "Eat local, be proud." In China, brands like Dicos and Wallace Fried Chicken filled the void, promoting local flavors and culture. Sales surged as consumers, driven by patriotism and price, abandoned McDonald's. These brands became cultural symbols, not just cheap alternatives. In India, Jumbo King Vada Pav and Wow Momo celebrated street food culture and national pride. They expanded rapidly, taking over prime locations once dominated by American brands. The market shifted. Authenticity and local identity became the new currency. For decades, local brands imitated the West. Now, they embraced their roots. By promoting local flavors, they changed the rules of the game. The future of fast food in Asia was no longer American. The local dragons had risen. The Golden Arches were no longer the only game in town. The trade war's impact hit hardest in America's heartland. McDonald's, a massive buyer of U.S. beef, potatoes, wheat, and dairy, slashed orders as Asian sales collapsed. Farmers who'd supplied McDonald's for generations suddenly had nowhere to sell. Potato farmers in Idaho, beef ranchers in Texas, dairy producers all faced plummeting prices and looming bankruptcy. The pain was immediate and devastating. These weren't just numbers, they were families losing their livelihoods. Many had supported tough trade policies, only to become the first victims. The contradiction was painful, wanting America to be strong, but needing global markets to survive. The crisis exposed the harsh reality of global trade. In an interconnected world, trade wars have no winners, only casualties. The American dream was turning into a nightmare for many. The ripple effects of the tariffs were felt far from Wall Street. The trade war spilled onto social media, where digital nationalism exploded. #boycott McDonald's trended across China and India, fueled by millions of posts. Memes, videos, and protests made eating at McDonald's feel unpatriotic. American brands were overwhelmed by a wave of online criticism and local pride. Attempts to defend themselves only sparked more backlash. Some restaurants faced protests. Corporate accounts were flooded with anger. The digital battlefield was brutal, and American brands were losing. In the 21st century, viral campaigns can destroy reputations overnight. Winning hearts and minds now meant navigating a minefield of cultural pride and online outrage. The crisis raised profound questions about the future of global culture. Is this the end of unchallenged American influence? China and India are no longer content to consume American culture. They're promoting their own. The attack on McDonald's signals a new era of cultural protectionism. Other American brands, Starbucks, Apple, Disney, could be next. Success now demands deep localization and cultural sensitivity. Being an American brand is no longer an automatic advantage, it may be a liability. The global balance of power is shifting. Cultural influence is as important as economic or military might. The story of a burger and fries has become the story of our changing world. The golden arches may never shine as brightly again.